All right, welcome back, everyone. In this episode of the Next Multibagger, we're going to be breaking down Perion Network, ticker symbol PERI. Now, Perion Network is a very exciting growth company that is starting to get a lot of traction in the market within the past year. Now, Perion is a global technology company that delivers strategic business solutions that enable brands and advertisers to efficiently capture and convince users across multiple platforms and channels. Now, some of these channels include interactive connected television, or CTV, and Perion achieves this through its synchronized digital branding capabilities, which are focused on high-impact creative content monetization, its branded search network, and social media management that orchestrates and optimizes paid advertising. Now, this whole diversification within their whole ad business positions Perion for growth as budgets shift across different categories. So in this episode, we're going to be taking a deep dive into what exactly Perion Network does, as well as its recent financials and its growth trajectory in the few years. So without further ado, let's dive right into it. So Perion Network, as of today, August 6th, 2021, is currently trading at $19.20 per share. Now, let's dive into their investor relations and first talk about the kind of industry that they're working in. So we can see that the digital ad spending worldwide from 2020 to 2024 went from around $340 billion to around $542 billion. Ad tech represents around $500 billion of opportunity for the total addressable market. Now for Perion, they have multiple sources of growth. As currently right now, they have social, connected TV, and e-commerce. They believe that by focusing on these different areas, they're able to grow their total addressable market and grow into this bigger valuation. In 2020, they saw pretty good business momentum as they closed on a big $800 million Microsoft Bing partnership. They acquired two different companies. They're focusing on content monetization, CTV, and intelligent high-impact creative ad units. For the revenues, they saw around 31% year-over-year growth. And for the annual revenues, they saw around 15% year-on-year growth. Now, the great thing about Perion is that they have a very strong balance sheet as well, despite being a very small company, under $1 billion market cap. We can see from 2016 all the way to 2021, their debt has been significantly and consecutively decreasing over time, from around $92 million to around only $6 million in debt. Now, as for the net cash, they went from around negative $43 million all the way up to $120 million in total net cash as of Q1 2021. This means that they have ample amount of cash to further fuel their investments and acquisitions and to continue executing on the current business plan. So what exactly does Perion do? Well, they work in three different areas. They work in social, display and CTV, and in search. So within social, they focus on increasing brand awareness, meeting customer intent, and enhancing engagement levels. Now, looking ahead for the 3-year growth plan. From 2021, they're projecting around $380 million. However, in 2023, they're projecting around $500 million in total revenue. That means it's around a 15% compound annual growth rate. Now, their adjusted EBITDA is projecting to be growing from 10% all the way up to 12%, leading it to be around $60 million in 2023. Now, one of the competitive advantages that Perion has compared to some other competitors in the space, like the Trade Desk, as well as Magnite, is that Perion has a hub-spoke product strategy. Now, this hub is the intelligent hub, and this acts as a central nervous system for branching out into different areas. So we can see on the left side, they have demand from brands, agencies, and large search engines like Microsoft Bing. Now, with their demand assets, like their intelligent high impact and product ads, they're able to use that in conjunction with the supply assets with 80 owned and operated sites, their own publisher network, and mini sites. Getting this from the supply for social, like Facebook and publishers, they're able to adequately meet all their customers' needs by distributing all their advertisements into key strategic areas. So Perion actually just reported earnings earlier this week on August 3rd. And Perion beat on both their top line and on their bottom line. Now, for the top line, they reported 109 or 110 million in total revenue, translating to 82% year-on-year growth, which actually beat by around $5 million. Now, for the EPS, their non-GAAP EPS was 33 cents, which beat about 6 cents. And the GAAP EPS was 19 cents, which beat about 1 cent. Now, these are very strong revenue numbers, and their EPS is seeing very good growth as well. Seeing 82% year-on-year shows that they're seeing very strong demand in their overall business, and they expect this to translate very well into the next few years. In 2021, management expects to generate revenues of 415 million to 430 million, while the consensus is pretty in line at around 424 million. Adjusted EBITDA is projected to be around 50 million. And while we compare this to the prior guidance, these are actually raised slightly higher. So I want to take a deeper dive into exactly their most recent earnings report. So we can see Perion delivered 82% year-on-year growth in the second quarter of 2021, and they introduced 2022 guidance encouraged by improved visibility. So some of the key standouts is that the results included 211% advertising growth and strong margins as well. Their management expects to receive over $500 million in revenue in 2022, which is a whole year earlier than expected, representing a compound annual growth rate of 25% between 2020 all the way to 2022. So just hearing that the management is confident enough to give guidance all the way into 2022 makes me feel very confident in that they are able to achieve over 25% growth. And with those growth rates and the current valuation, I think Perion is very attractive as an investment. So let's continue diving a little bit more into these highlights. Doron Gestel, Perion CEO, commented, "This quarter's performance is another indicator that we are executing on our disciplined strategic plan and positioned to achieve our 3-year targets a year earlier than expected." So given that the fact that they're able to achieve their goals, their 3-year goal 1 year earlier, just shows the significant confidence that they have and the business momentum that they're seeing moving into 2022. As mentioned earlier, Perion has 141 million in cash and 0 debt. So with a lot of these smaller companies, you need to worry about their debt levels, how much cash they currently have, and you need to worry about some possible bankruptcy risks. But with Perion, we don't need to worry about that because they have a very strong balance sheet with a lot of cash and no debt. Now, as for more detailed financial highlights, we can see a different breakdown of all their different revenues. So they break down display and social advertising revenues and search advertising and other revenues in 2 different categories. Now, we can see that they make up about the same amount of total revenue. Display and social make up around 58 million, while search makes up around 52 million. Now, as for their net income, we can see that they're actually turning a profit. They have around 7 million last quarter compared to last year where they saw around a negative 2.2 million. Going down the board, we can see all their metrics are up drastically as they just turned a profit and they're really showing a strong business momentum on their top line, which is directly impacting their bottom line, turning a profit. So as long as they're able to continue executing on this, continue to grow their top line revenue at very strong double-digit growth. It'll translate very well to their net income as they have a very high gross margin, and it'll start impacting a positive bottom line. So now that we've broken down exactly the earnings report and exactly what they're all about, let's take a look at currently where Perion is trading right now. So this is currently a chart, a 1-year chart of Perion. And we can see back in November to December, they're only trading around $7. But in December, Perion shot up as they announced a strategic partnership with Bing. And this strategic partnership is a 4-year contract going to around $800 million. Now, Perion is currently only trading around a $600 million market cap. So knowing that they have those kind of revenues locked in for the next 4 years makes me very confident that Perion is going to see a lot of continuous growth, and they already have a stable supply of growth with their existing contracts as of right now. Knowing that, the stock started to run massively, as I saw a jump from around $7 all the way up to around $18 in just a little less than a month. Of course, the stock fell from there, but ever since, the stock has been on a continuous uptrend ever since. And for the past year or so, Perion has done very well for shareholders, as it's seen around 200% growth in the past 6 months. So where does that leave Perion right now? Well, as we can see, Perion is currently trading in this range. From the very start of February, where it started downtrending from around an all-time high of around $26 to where it's trading at right now at just shy at $20. Perion has been consolidating in this range, despite the fact that Perion has been seeing a very good business momentum and business updates in the past few quarters. I think Perion, despite seeing this downtrend from the very start of February, Perion is still looking like it's holding the support in this uptrend, and it'll continue to do well moving into the later half of this year. Currently where it stands right now at $20, I think Perion stands as a pretty attractive investment. But with that, we need to dive into their valuation to get a better idea of exactly why I think that. So when we jump into Yahoo Finance, we can see that Perion is currently trading at just shy of $700 million market cap. Now, their PE ratio is only 30. And when we take a look at their forward PE, we can actually see that their forward PE is currently at 21. So this is compared to a bunch of other fast-growing companies that are highly scalable and also have high gross margins and growth percentages, are trading at much higher valuations than this. Now, taking a look at their price of sales, we can see that their price of sales is only sitting at a 1.6. Now, 1.6 is dirt cheap compared to a lot of these other comparable companies. When we look at other comps in this space, such as Magnite is currently trading, we can go ahead and bring it up, but Magnite currently trades at a price of sales of around 6. So knowing that Magnite trades at a price of sales of 6, and it's also significantly more overvalued, that just means that there's a lot more upside for Perion to grow into higher valuation. And the thing is, Magnite is not even a positive company. We can see that they don't even have any trailing PEs or forward PEs, as they don't have any earnings. So despite the fact that Magnite is doing less revenue, $246 million, compared to Perion, which is doing $400 million a year, not seeing any earnings, while Perion is seeing earnings, and Perion sports a lower valuation, I think there's a lot of upside for Perion moving forward. As Perion continues to grow and the business momentum continue to carry positively, that would act as one catalyst. But the other side is for them to grow into a higher comp set using other valuations such as Magnite or the trade desk. Perion can actually, their valuation can grow higher, which would in turn push up the stock price as well. So with that, I think Perion serves as a very attractive investment. They have very low multiples, low growth, and margin expectations. However, they've been beating on every earnings. We can see in the past 4 earnings that Perion has been beating every one. And in Q2, they actually beat as well, as we talked about earlier. So that means 5 quarters of consecutive quarterly beats. Now, the exciting thing about Perion is that not only are they seeing this strong business momentum, but this total addressable market in their industry is one of the fastest growing today. Knowing that, as well as their analysts' price targets are up over 50% from here, and they just executed very well in their most recent earnings, I think Perion could be a very attractive investment for us investors looking for a very speculative but high reward opportunity. So with that, guys, let me know in the comment section down below what you guys think about Perion and if you guys think of it as an attractive investment opportunity. Before we go, don't forget to smash that subscribe button and leave a like while you're at it. If you're listening to this on the pod, don't forget to drop a 5 stars on Apple Podcast. And with that, guys, let's go get that bag.